What's up guys, Sarah back with another video, and today's video has been highly requested by you guys, which is for me to reveal my entire stock portfolio. So I finally decided I would make the video after being asked so many times, so I'm going to be revealing my entire $100,000 stock portfolio as an 18-year-old. Now I was very hesitant on making this video at first, just because I was worried that people would be like,
oh, she's investing in those companies, so I should invest in those companies too.
But then I was like, you guys want the video, so whatever, I'll just make it anyways. So basically what I will be doing is be going over my exact positions and also give you guys some insight on how I was even able to grow my portfolio. And I remember when I first started investing, I thought it was so complicated. I had no idea what I was doing, and I thought that I wasn't going to be able to do it properly, or I was just worried that I was going to lose money. But then I finally realized that it's honestly not complicated at all, as long as you do your research though. But anyways, I have been rambling, so let's just get right into the video. Actually, before I do get into the video, I do have a couple things that I want to address. The first thing is, the main reason I'm actually making this video is because I personally love to watch videos like this, and I love to see how other people manage their money, so I decided that I would make the video myself. And I always get you guys asking me, should I start investing at a young age, or is it too risky, is it too complicated? And as you guys know, I'm only 18 and I started investing, and I will say that it is 100% worth it. And for those of you wondering how I was even able to make this much money at such a young age, I'm going to just give you guys a little backstory. So it all started when I was 15 years old, and I got my very first job at Tim Hortons. And I'm still working a job, except now I've upgraded and I'm working at the bank. But in those almost 4 years, I've basically been trying out so many different side hustles, doing so many different things to make money, and I finally found a couple of things that really worked with me. So something I found some success in was starting an e-commerce business. So that's what I'm currently doing right now, and a lot of the money that I make from there just goes straight into the stock market. And I also started swing trading a couple months ago, and honestly that has been a really good source of income for me as well, and all that money is just also going into the stock market. So basically now a good chunk of my money goes into the stock market every single month, and I always make sure that I'm consistent and put about 30 or 40% into the stock market. But anyways, let's finally just get right into the video. Alright, so we have my first portfolio, which is with Wealth Simple Trade, and basically this portfolio is mainly me gonna just be investing in dividend stocks, also some growth stocks, but I'm also just gonna focus on dividend stocks. And this portfolio is new, so I opened it up before the crash happened, and now I have my next portfolio, which is with Questrade, and I have about 10,000 USD in this account. But I haven't really used it much because I had some issues with it, but as of now everything is just cash in here, but I will be using that money once the right opportunities come up. In this portfolio, I'm just going to focus on growth stocks only. Also, if you guys feel like using this broker, which is Wealth Simple Trade, and get a $5 free credit, I linked it in the description. But anyways guys, let's go over my positions, which are all in this portfolio. So my first and largest position is Enbridge, which is an energy transportation company. And honestly, this is not my favorite position, but I will explain why in a bit. So as you guys can see, I have quite a bit of money invested in Enbridge, over $30,000, which honestly is a lot to have in just one company, but obviously I've done my research and I know the risks involved. But one of the main reasons why I'm invested in Enbridge is because it pays a really good dividend, and it sits at about 7%. And after doing my research, I came to the conclusion that it's a pretty safe stock to hold long term, but the only thing that I'm not really liking is that there really hasn't been much growth over the past couple of years. So I'm thinking that I'm probably going to end up selling maybe 30 or 40% of my position and put my money somewhere else where I'm going to get a much better return. And as you guys can see, I am down quite a bit with this position, but obviously I will not be selling at a loss, so I'm going to have to wait it out or even break even until I sell my position. Now my next position, which is a growth stock, is Shopify, and Shopify is an e-commerce platform that I am personally using and a lot of other people use as well. So my average price for Shopify was around $975, and I got 11 shares. And if I'm being honest, I think Shopify is way too overvalued right now, so I probably will end up selling my position and just make a profit. So I guess this was more of a swing trade for me. And if I was to ever buy Shopify, I would probably buy it at $700 per share, because that would be the right valuation for me. Now the next stock I have in my portfolio is BMO, which is Bank of Montreal, and it is a Canadian bank stock. So one of the main reasons why I am invested in BMO is because it pays a really good dividend, and like I told you guys before, I'm going to focus on dividend stocks for this portfolio. Also, the nice thing about this stock is that the dividend yield has been increasing over the past couple of years, and also the stock has seen some pretty good growth over the past couple of years as well. And I definitely will be buying more of the stock, but probably at an average price of $65 per share. Now the next stock in my portfolio is TD Bank, and this is also another Canadian bank stock, and I'm invested in this stock stock for mainly the same reasons why I'm also invested in BMO. So they also pay a really good dividend, and TD has also expanded their services to the United States. So I think that they're going to have a lot of growth long term compared to the other Canadian bank stocks. So I do plan on buying more of this stock, but I'd probably buy at an average price of $55 per share, and that's Canadian dollars. Now the next stock I have in my portfolio is BNS, which is also another Canadian bank stock. And as you guys can tell, I do like the Canadian bank stocks because they all pay really good dividends. And because I am from Canada, I do try to invest in as many Canadian stocks as possible because the American dollar right now is really high and I hate having to convert my money. And if I was to add more of the stock to my portfolio, I would probably buy it at about $53 per share, which again is Canadian dollars. Now the next stock I have in my portfolio, which was actually the very first stock that I ever bought, is Tesla. So I got Tesla at an average price of $300 per share, but unfortunately I ended up selling it when it hit $800. So the main reason why I actually got Tesla again is because I do want to swing trade it. So my average price for this stock was $9.60 and I got 7 shares. So I am quite up on my position right now. So I do plan on selling my Tesla stock in the weeks to come, and as you guys have probably heard, or maybe you haven't, but what's going to happen is Tesla may be considered to being added into the S&P 500 index, so that is good news for Tesla, so we'll have to see. But I definitely think that Tesla is an amazing company to hold long term because of the growth potential. And I even talked about the stock on my channel when it was like $500 per share, so I wonder if anyone actually listened and bought, as long as you do your own research. So now I'm going to wait and buy Tesla at a better valuation, but I have no idea if it's actually going to go down, and I actually kind of highly doubt that it is. Now the next stock I have in my portfolio is Air Canada, which is Canada's largest airline. So I definitely am iffy with this position because there is a ton of risk right now in the airline industry, and who knows when things are going to recover, because I feel like the sickness could come again and there could be a second wave, so I really don't know if I'm going to continue buying more of the stock. But obviously it is quite down from its highs back in January, so I am going to hold this one long term. But this is definitely one of my more risky investments, and I do think it's going to continue to be very volatile now for the next couple of months, or even for the next year, because who knows what's going to happen. But I'm just going to keep holding it regardless, and hopefully, you know, it goes up in the future. Now the next stock I have in my portfolio is Facebook. So I actually only have 2 shares of Facebook, and my average price was about $206. So my plan with this one is to average down, but the only thing is right now it is quite overvalued, so I'm probably going to have to wait. But I definitely am going to continue buying more Facebook stock because I do believe it is a great stock to hold long term, especially with the growth potential that it has, so I'm probably just going to keep on averaging down. Now the next stock I have in my portfolio is Carnival Cruise Lines, and I actually bought this stock several times and sold it just to make some profit. And I actually only have 2 shares of Carnival Cruise Lines, which honestly really isn't much, but I guess it's just more of a watch list for me so that I can just monitor the stock. So this is definitely one of my more risky investments, and I only plan on buying more of the stock if, you know, the travel industry starts to get better, but honestly I don't know when that's going to happen. Now the next position I have in my portfolio is VFV, which is the S&P 500 Index Fund ETF. So believe it or not, it's actually proven that most investors cannot beat the market. So because of this, most people like to invest their money in index funds or ETFs. So honestly, this is a safer investment, doesn't really require you to do much research, and also it's a good long-term hold. Now the next position I have in my portfolio is VTI, which is Vanguard Total Stock Market Index Fund. So this position basically tracks the whole stock market. So definitely not a lot of risk and doesn't really require you to do much research. But as for this portfolio, I do still have a large chunk of cash just sitting there, so I obviously will end up using that when the time comes. But my portfolio is still a work in progress. I still want to add some Tesla, Shopify, Apple, and Disney to my portfolio, and also average down with the stocks that I currently have. And I do plan on only using this broker for Canadian stocks and this one for American stocks, but as of now I'm having some issues with this one, so unfortunately I'm using this one for all my stocks. But my long-term plan for investing in general would honestly be for me to just maybe invest 20 to 30% of my income in the stock market and invest the rest of it into real estate. But obviously right now there are some great opportunities in the stock market, so that is my main focus. But that's it guys for my whole portfolio. I know it may not seem very diversified, but I am the type of person to, you know, research the companies very well, so I know all the risks involved. I don't think that I would ever be able to invest in more than 15 companies because doing research on all those companies would just be way too much work. But that's all for the video guys, so make sure you do join my free Discord group chat where we talk about the stock market, e-commerce, and just personal finance in general. And also, if you want, you can leave me in the comment section your opinion on my portfolio, or maybe even some advice or recommendations, because I would appreciate that, and I do read all the comments. But anyways guys, see you in the next video.